What do our viewers, our global Wall Street audience need to know about this plunge in yields versus the ones we've seen since 2007?
One could say a lot has to do with risk premia. Investors are worried. And it does have to do something to do with the aging of populations, one could say. As we get older, we go higher in the capital structure. Look at the performance.
We want to buy bonds, price up, yield down.
We want less risky things in our portfolios. Look at municipal bond yields this year. As a percentage,
Unreal.
as a ratio to Treasury yields, they've plunged, call it 75% for 10-year AAA versus the 10-year, meaning it's yielding less
okay, the demand is
than
out
the
there,
U.S.
Tony.
10-year.
Sir John,
Unusual.
Sir John Templeton said this. There'll be a shortage of bonds. I get it. Everybody, the demand is there. Price up, yield down. Link it away from your expertise to the equity markets. If we've got a Pimco bond market like we have, why are equities elevated?
Well, it has to do with investors not wanting to, investors, companies, households not wanting to put money into investments. Governments are not doing it either. Corporations would be investing more. There would be more capital spending. Here's one statistic. In the last 60 years, there has never been a decline, as we've seen in the past 5 years, in what's called capital intensity, the amount of things in place per unit of labor. The productivity is pretty easy to understand. It's three things: people, stuff, plants, equipment, software, roads, bridges, and TFP, they call it, total factor productivity. How do we use people's skills? How do we use the stuff in place? It's this middle part, the stuff part, that's been weak. We've seen a decline in the amount of things in place per unit of labor. In other words, in the United States in the last 5 years, the numbers of people working has increased by, call it 12 million.
Have we exported the capital intensity to Malaysia, or has it gone away in a service sector, our iPhones and all that?
Yes, where are things made? Yes, abroad. And this is part of the spat that the United States has today with China, the hollowing out, you could say, of America. But it does reflect the difficulties the U.S. has with its own fiscal situation. Of the $4 trillion or so the U.S. government spends, about $2.5 trillion of that goes toward entitlement spending. This is not an argument over whether that's good or bad, but what's left is $1.5 trillion. Half of that goes toward defense, and there's very little left to go in toward investment. We hear a lot about how America needs a lot of infrastructure spending, and we're not getting much of that. And so it does reflect the difficulties the U.S. has with its own fiscal situation at the state and federal level.